All right, recording, rocking and rolling. All right, so I'll get started here with just kind of talking about what's going on. All right, I think I got it all. All right, I think I got it here. There's a bunch of pop-ups. Oh, they must have made some changes. Okay, here we go. All right, so let's get rolling here. So kind of what's going on here today. We had a bit more selling than I kind of expected. But you know, as this all happens, you know, you kind of call the shots as you go. So I think what's been going on here is we're starting to see this secondary. Hey, Susan. We're starting to see this secondary ABC pattern, I think, come to fruition. So we kind of did have this slight little high here, this slight new high. It looks kind of like a weird pattern, but overall here, let me kind of zoom out a little bit. Let me make it all the same color so we all on the same page. All right, so it's kind of weird, like how to describe this. It's like a triangle within a triangle. Let me see if I can kind of show you guys what I'm talking about here. So before we were talking about this, sorry, I know I got a bunch of crap here. Before we were talking about this kind of small, you know, high and tight sort of triangle here. So, hey, Don. You know, before I was kind of talking about the bullish setup where we might, you know, break out above. But I was also talking about the prospect here of it not really breaking above and having like an ascending channel here. And I guess why it's important is because this entire thing here, no matter which way you draw it, it ends up being, you know, like a longer term bearish pattern. And now that today we had this little little breach here. Now this is important because this is kind of what broke a lot of support, or at least a lot of, like, you know, options positioning that that people have, you know, typically relied on here as like support levels to go long. I was kind of thinking here that we might see at least our first view of like a 5-wave down. Now this entire thing here, we've been seeing nothing but, you know, ABCs, 50% retracements, and so on and so forth. Now this is a longer term sort of pattern here. So if the bulls can't really, you know, reclaim this and keep it that way, tonight is probably going to be the big, you know, like the big, I guess you could say, like, I'm at a loss for words here, guys. I'm sorry. I'll practice my speech next time. But really what we're looking at, I think, is you'll see this rejection here of this trend line, and that 5-wave down that I drew before, that could be the backside here of a larger sort of correction. And I'll go through that here in a minute, but let me pull up kind of what happened today and show what's going on. Oh, before I kind of keep rolling here, does anybody have any questions, anything they wanted to cover specifically? Any like pickers or anything fun? You guys are all just mesmerized by my droning on of Nasdaq and crappy jokes. Got it. All right. Bitcoin. Okay, you got it.
I was going to say monster.
Monster.
Not monster. Monster. I'm sorry. MicroStrategy.
Okay. All right, no problem. Cool. Those are 2 peas in a pod, so we can get to that. Okay, so I won't spend like too much time on it because a lot of it is, or too much time on like the indexes here, because there are, you know, it's either gonna sell off or it's not, you know. And as soon as you have one of these trend line breaches, usually the next day you will see either a continuation, because that's kind of like the signal, like, hey, there's weakness there. Bulls weren't able to buy it up. You know, sellers have distributed enough. Now they want to sell the market down, and let's have some lower prices so we can start this cycle, start the next bull cycle. The other scenario that could be bullish here that I still wanted to cover and not discount is let's say we have this this trend line touch. I call this like pattern expansion. It's not necessarily a unified term here, but what this means is like you can have a day like this that kind of fakes out a lot of bears, so people go short, and then they have to rush to cover as as the bulls buy this back up. As you can see here, we do have a decent amount of buy delta up here, so it's possible that we could see, if I kind of zoom in here, sorry, get out of here. If I kind of zoom in, we might actually see something like this. Like if the bulls can muster enough courage to keep buying the dip here, you could see something like this that just continues this pattern. And that's what I mean by pattern expansion, where typically you see like these five connection points. Excuse me, like these 5 connection points in the entire structure here. And usually what you see here with these triangles, like they can be like wave 4s, but usually it's like a means to an end. Especially if you have a consolidation pattern. The consolidation pattern is it's kind of like a signal that there's distribution going on, and you can kind of see here that there's been a lot of accumulation at the top. So this kind of looks like reaccumulation, which again, it's conflicting signals. So in the past, you would have more like a uniform sort of like a higher sell delta above these levels. So like for example, in this zone here, you might see a lot more higher sell delta, but that's not necessarily the case. So I think it's not really like a slam dunk that we're going to see more selling here. I think you might see something like you could potentially see a higher high. So while I don't think that this is going to be what we see here, I can't discount that possibility. And if you look at like the S&P, so the Nasdaq I guess is weaker, but when you look at the S&P, it's really got the same sort of like you kind of see like this sideways sort of head and shoulders kind of thing going on here, and that's also remarkable because it kind of like speaks for the for the overall trend itself being very strong. So from a from like a different like a different index perspective here, the S&P has been a lot stronger. I think that was they're trying to drive that up to the 7,001, but also too we just keep seeing these triangles here, and they're usually like a means to an end. So typically, you could say that this is like a flat sort of corrective thing, or regular, whatever you want to say. But I guess the main takeaway here is when you do see these sort of things materialize, you can see breaks of patterns or breaks of longer term trends. You saw that with when we went back here. Let's see here. Yeah, you saw that with like the April low, how we had this big long uptrend here. Everybody was having a great time, blah, blah, blah. And then all of a sudden now we just plunged right through it. And then we kind of have this little back test here. And that's kind of what I'm looking for right now is, you have this longer term, I guess, back from August, you have this kind of like ascending sort of pattern. And they see a lot of this, like these like bigger cells that get bought up. So you're starting to see the volume increase. And once you see the volume increase, that's kind of like another signal that there's distribution going on. So if I had to put a percentage on it for like what's going to be next, whether it be bearish or bullish, I would say very, very short term. Here, let me go back to the Nasdaq. Very, very short term, we could see this sort of bullish end here into like OPEX. I don't think it's going to be this aggressive though. I think it might just be maybe like a smaller sort of retrace like this, but you're starting to see a little bit more weakness here, and you can just kind of see it through the price action. So long story short here is, so what happens if it's not bullish? That's a big question that I think people are asking right now. Before it's been kind of easy, like people kind of see these patterns and it's like, okay, people don't really know technical analysis. So they just say, oh, well, fundamentals are strong, and the bubble's just, there's no bubble. Things are just getting started. So, anyways, close up to 7,000. I think is a pretty nice round level that I think a lot of people like. It sticks with them, and you haven't really heard anybody say anything about like S&P 8,000, right? Unless you're nuts, or unless they're nuts. I don't know. That like the Shiller PE ratio is already eclipsed 1999's peak. You've got a lot of these other longer term sell signals that have kind of materialized here. So I think short term, what you want to do is you want to just kind of weigh your risks and your opportunities here. Going short is tough. Everybody knows that. I've been trapped a couple times. It's terrible. It sucks. But I guess what you could do is lighten up any longs that you might have. At least just kind of see where it's going, because if you think about it, if you get another, okay, let's say it keeps going back up. Okay, you got another maybe 2.5% here before you start to get to the upper bound of this sort of pattern. And if you look at something like the S&P, if you look at something like, so let's say today, right, you got another like 1.5%. I mean, that's a Friday, for price action to get there, and we may get there by Friday, but I don't think it's going to be something that's obvious. And in my opinion, tonight and tomorrow are probably going to be the defining moves here of what's going to happen over the next probably couple weeks. And why I say that is because if you start to look at this smaller time frame here, futures open is a huge like a hugely, I don't know what the word is, huge and bigly, whatever, sort of indication here of what's going to happen pretty much the next day, because it's kind of like the futures guys set up the next day. So if you've been kind of looking at this here, I've been looking at it bounce around in a like a 0.15% range here ever since I started the call. And that's not really good, because you can also see here that there's a lot of volume. And sometimes, like when you see these big sell spikes and stuff, that's just sellers testing buy support, especially after they kind of like let them buy it up. It was a very kind of weak short squeeze into close today. But what I'm looking for here is this kind of being like the top, at least overnight. And if they do somehow manage to make a higher high, into tomorrow morning, it should get faded, or like it should be sold down here. So kind of what I'm thinking is that you'll see like a continuation here, and maybe you'll wake up tomorrow morning and markets will be down a decent amount, but you don't really see like a ton of buyers here right now. It's just more of like sellers kind of pushing down, and I think that's kind of what the intent was of something like this, where you go into close, and that's where you see you see one side trying to push the narrative. So today was kind of about where's the right spot to buy the dip, and you can kind of see it through options data and things like that. But now, like, some of that structural support is breaking down, and you can kind of see there's just decent amount of red left, or a decent amount of red on the screen here. That's just it just reminds me of distribution. So enough about that. That's short term. Short term, the setups are you could see a continued bounce here, and then likely when we bounce today, that was the bounce, and then we just keep traveling up here, and then this is more of like a continuation, and you just see one more wave series up here to make a higher high, at least like a higher local higher for the Nasdaq. But then for the S&P, that'll probably hit your 7,000. So something kind of like this. But I know it kind of feels like I talk out of both sides of my mouth here with this stuff. But just to be fair, you see these ascending channels, these triangles everywhere. You can redraw the same thing 3 different ways. It still is a bearish pattern, and I hate like harping on this sell kind of thing, because it doesn't really happen very often. But when you do get to these sort of breakpoints here, that really is a good signal that tells you that there's motivated sellers out there, or at least like the macro economic environment is deteriorating enough where everything isn't that, you know, everything isn't great. So that's kind of where I think that, you know, we really got to be careful with watching like the price action throughout the day. At least, you know, I mean, I will, of course, but for you guys with your investing styles, what you'll want to do is you want to take a look at like how are the sectors doing, like how is market breadth, like those are things that I will post on occasion. But you know, I don't know like what you're all invested in. I mean, I know Don's invested in metals. That I know, but sorry to pick any of that. But you know, realistically, these are the kind of breakpoints that you really need to pay attention to because they could develop into something serious. So, you know, I think the safest course of action really is, you know, markets generally go up, but when you start to see some weakness like this, maybe it's time to take some off the table. You know, take your profits while you can. I mean, again, think about the average that the normal mere mortal makes in their 401k. It's like 10.4 or whatever over the last 50 years or something like that. It's probably changed over the last 3 years. It's probably dragged that average way up. But sorry, blowing on the mic. Anyways, so what does that mean if we actually see this thing break down? It kind of looks a little symmetrical where, let's say, you know, we've got these continued highs here. Oops. And you probably heard me mention it over the last couple days that, you know, this is now what the 5th or 6th major attempt here to make higher highs, and it just failed every time. It's been really, really difficult for the bulls to get any sort of traction up here, and that's not necessarily, you know, an accident. I think it's also too because other indexes like the S&P, like you want to hit a number. You know, these guys have these long-term trading plans that they push to their advisors and things like that. You look at something like the Dow. I mean, the Dow is almost at 50,000, but I think it would be kind of like a cruel twist of fate where, you know, you fall just a couple points shy of, you know, like those nice round numbers. And I also think it's it's kind of by design too, because you know, you get a lot of people that have a lot of like orders that are placed at those significant levels, like a lot of long-term investors. So, you know, like liquidity sweeps and stuff like that might be a motivator as well, but we just don't know yet. So let's assume that everything is not all well with the markets. So what can we expect? Typically, what you would want to see here is at first, you know, we kind of draw what looks right, I guess, or at least like what kind of looks like symmetrical at the, you know, hourly and daily levels, and then kind of, you know, take a step back and see whether it's realistic or not. I think here that, you know, we are seeing, or we will at least, you know, kind of get close here to this last little wave. If you guys remember a couple months ago now, this really does look like a final wave 5 after a very, very long like wave 3 up from like the you know, from the April low. And you know, once you've had several series of these impulse waves, then that's when you start to see the corrective waves that start to show up. So, you know, not only was that like there's a special name for this pattern too, but you know, essentially it's just a consolidation pattern that is part of, you know, a larger 5-wave cycle. You can also kind of make the same counts here for 5 waves, but it's a little bit weird. So things kind of get a little distorted when you're looking at like major market tops. And you can also kind of see here that we have a lot of buy delta in general. The Nasdaq just kind of looks like it's tired, like it wants to pull back a little bit. It's you know, we've had many months of just nothing but up, and you know, these guys have to be running very, very low on inventory, or they've bought so high that they want to unload it because they can kind of see that, you know, maybe the AI, you know, fad of the bubbles and stuff is not quite as rosy as it was 6 months ago. So realistically here, if I guess from like a, you know, like a charting standpoint or wave theory, you do see these sort of checks here on prior wave lows. So if you do have a breach of this level, then that means that typically you're now in a corrective pattern. But if you do have some sort of bounce here, like at your last like major wave 4, even if it's small, then it's still bullish. So in my opinion here, even if you see, selling down to this, this entire zone here could be a larger sort of wave 4, and then we'll have to, recalibrate for that. But, like a pullback like this is not unheard of, right? I mean, it's from peak to trough here, we're talking 12.3%. And let me zoom out to put it in context for you. That's a paltry pullback compared to, something like we've seen here, since December of 22. I mean, it's been quite some time. There's also a couple different patterns that we could see, but realistically, if you see a breach of that level, then it's like, then it's a signal for a much deeper correction. But let's not get nuts with that right now. All I wanted to highlight here is that, people do kind of ignore these sort of patterns after we've had a really large bull run, and they always kind of forget what a correction's like after a couple months worth of nothing but up, and usually they forget the rules. So the rules are, normally you can see a very strong C leg, especially when you haven't had a correction in a while. We've also had a lot of consolidation for months. So there's, I think that if you do see a continuation here, it's not like a buyable dip until you actually see some strong volume, and highly likely, you'll see a lot of like battling at these different bid levels here, especially like our like this 25 600 kind of level. That's where you'll see, sorry, 24 like 24 700, that kind of thing. And if you look at something like the S&P, like just a general sort of pullback here, really, you kind of go peak to trough, especially if it exceeds here. But even if you have like a 50% pullback here, that still takes you to 6750. Even further than that, which I think is likely, if you do see a breach of a trend line like this, like let's say a wave 1's like that, you could see something like this, and that would be a reasonable sort of C leg. Now I know it's a little bit hard to see on the S&P, that's why I'm not really using it right now, but technically, this is possible. You could also see something like this that would make a lower low, and that is actually a very crisp, irregular correction. I mean, it doesn't get much more textbook than this. I mean, I stare at patterns like this all the time, but it really doesn't. This is a really easy one to kind of pick out on the chart. But assuming that the Nasdaq is some sort of flavor of that same sort of thing, it still qualifies. So both of the indexes should fall in tandem like that. They just have like different starting points. So for right now, I'm just going to say like ABC, keep it simple, but you could see like a 5-wave sort of move down like this, and the one thing I will say is that how to kind of tell when you're in a wave 3. So like we will have we'll probably have some more selling here, and then like a bounce, and then people will say, oh, this triangle's intact, and then we're going to see another one of these guys, and then we'll hit higher. That's kind of like the suckers, counter trend rally, but that's also a rally to cover. So if you have trap longs, that's like your signal. You should probably try to get out of those longs. So if we do see something like this and it does turn into 5 waves, the way you can tell if we have this, the third wave down, is that we have one day where it's just sell, and there's like nothing stopping it. Like any dip that's bought like gets sold down within 15-20 minutes, that kind of thing, and it just kind of keeps punishing throughout the day. That is like your signal that we are in a wave 3, or in the middle of like a C leg. So I guess how you can interpret that is just don't do anything. Like don't buy anything. Certainly don't buy anything. Wait till it's done. So this is the part where I think patience is going to pay off for you guys. where we've had such a great bull run, people forget this stuff. But if we end up dropping 12%, something like that, even as just a first little downdraft here, it's not gonna be fun for longs, especially if you hold like DQQQ or SPXL, something like that. I don't want to say this like in the channel right away today, but if I do get another opportunity here where, let's say, we have this little bull run, a little bit higher, I will be adding to the stranded short positions just so I can get out of that stuff. There's really no other option there. I don't want to let it assume that there's going to be a 20 or 30% correction here and then see only 12, and then all of a sudden, you're still not able to get out of trap shorts. So this is kind of where the patience part pays off, where if you have stuff that's trapped lower, this is kind of a good spot to add now that we've seen a little bit more weakness. But I still want to just wait a little bit longer because all this volume stuff stacked up here. So that is the kind of the medium term scenario here. That's kind of where I'll stop it. Does that make sense, or am I talking crazy? What are your thoughts? Yes. You got a raised hand.
Yeah, if we get a modest wave 4 correction, and that wave 4 correction in November was not a wave 4, it was just a blip. What do you think a modest correction will do to UVIX?
Well, the VIX. Oh, okay. Yeah, so you can already start to see it's perking up here, and we've only gotten just a little bit of selling here. I mean, especially UVIX here. I mean, it's still the forward curve, but you can also see it did rise in tandem with the regular VIX, which is kind of like that's another sort of signal where you can see here that like people are starting to buy puts, but like farther out. So they might be seeing some trouble brewing on the horizon. They're not quite sure whether it's going to happen like today or tomorrow or 3 weeks from now, but at least there's some fear out there. Now, really where you start to get a lot of traction with the VIX is when you start to see these larger like wave 3 sort of moves. Now with the VIX even at let's see here, I mean today or whatever that, yeah, today-ish, it was up already to 17, almost 18. That's a pretty good jump. And if you have something like UVIX, it's gonna continue to trail that, but you'll start to see those sort of gains multiply here. So if you have several different or several days in a row, you could see a pretty decent rise here. Now again, buying volatility is pretty difficult. It's easier to short it, but from a longer term volatility standpoint here, we always seem to kind of peak around like 20, like 28, something like that. But that's only really been for the last couple of days. You see these extreme volatility events like back in April. I don't think something like that's gonna happen. That's kind of like a once every couple of months, or once every maybe like year and a half, kind of 2 years sort of volatility events. But I don't think it's it's unreasonable. But I do think that you could see something like a 28, and that's probably it for now, at least. If we if we don't see like a continuation with some of the selling. So if we do see, so like you're saying, if we just kind of see this blip, 10%, you're still going to see probably that 28 with the VIX, maybe even slightly higher. It just depends like how fast it is. Usually, if it like a correction is really really fast, then you start to see some really high, like a lot of put buying quickly. So we haven't really seen that since April. And anytime we have these little blips here like this, November or like this mid-October one, that's kind of what gave us those other little spikes there. Did that answer your question? Okay, I see you say yes. Any other questions about the indexes? Or I can flip to some of the other stuff.
Hey, Gaines.
Yes.
When you say medium term with regard to these indices, what's your medium term?
Medium term is like 2 months, I'd say, month and a half.
Okay.
Yeah, so like once something starts, like a correction, like this was a very, stepped sort of thing, but it was still only like 21 days. If we do see a C leg here, odds are it's going to take probably the same amount of time. Let's see here. So I got this crap in the way. It's kind of hard to kind of time it out, but I mean that will still take you to the end of February if if that actually does end up happening here. If it's a deeper one, then that's going to be probably require a little bit longer to develop, because you'll get multi-day counter trend rallies with, like, when you test the 200 daily moving average, the 50, all those sorts of things. So you should see some kind of back and forth there, but I don't think we'll see this like calm, cool sort of stair step correction down like we did for this first wave. I think this is a very controlled sort of thing, and really wasn't that much of a sell. But the C legs can be pretty violent. So that was only barely 9%. We should have a little bit longer here, but hopefully that answers that question. Any others? Okay. So yes, equities. I gave it a 60% chance of continuing. All right, now let's look at some of this other stuff. All right. So the yield hasn't really been doing much, so I won't spend much time on this. But just overall, there's been a lot of kind of back and forth, like with data delays and things like that. But I do think it's kind of consolidating here. So we'll see. I mean, with inflation and readings and stuff like that aren't quite blowing inflation numbers out of the water, it might not do much. But I do expect it to at least kind of head up here to like this bull target 1, probably sooner versus later. This is getting pretty, like, if you do all the counts and stuff like this in here in this little consolidation zone, the pattern's getting a little tired there. All right, let's talk about gold. So gold isn't, it's just nuts. Well, silver's more nuts, I think. But gold here, I think that I don't know, it's like you're starting to see the volume increase here, and that's where things can turn a little violent when it comes to price action. So I think what's important to note here about metals is that metals, commodities in general, they can extend their fifth waves, and that could certainly happen here, but you're already kind of seeing an extension in general. Like to me, this is a blow off top. I mean, it's pretty easy to see over the last couple of years, really. It's gone kind of the same way as equities, but this consolidation pattern that we had here back in like June, July, before everything kind of went nuts. This is a pretty clear like a pretty clear like bull pennant, and to measure that, you could get up to about, I'd say, like 5,000, and I think that's probably a pretty reasonable target there. It's just because, like, there's nothing else out there to hedge. People want to, some people don't want to buy crypto just because it's crypto. Some people want to buy commodities and stuff, but they're also a little scared to, buy in at these high levels, which I'm in the same camp. But it just keeps making high after high. However, we do see a fifth wave here, and or a 5-wave sort of sequence. So I think that these, both gold and silver, are going to follow the same sort of pattern. And I think silver's actually got a little bit more room to run here versus something like gold. But I think that silver here is in this wave 3, and gold's kind of topping out, or at least it's maybe it's like a fifth wave that'll extend, something like that. But you might see just continued buying here, and then you might see like a kind of a pullback back to like a key level, and then probably like a run up to 100. So me personally, like, I'm not taking any metal shorts, unless there's unless there's some sort of, unless there's some sort of like high conviction sort of thing. But in my opinion, this is where people are running for safety. If there are some things that there are some difficulties here, but also I think what's going to change is excuse me, I have a little trouble with my throat today. Maybe I was just yelling at these kids all day. No, anyways, so I kind of think here that you will see pretty decent selling in metals when equities also have a big sell, and I think that's just big institutions taking profit. Whereas in the past you might see metals that like rise and then equities fall, that kind of thing. Typically they're not correlated like that, but in this case we can see here that we've gone up really high. There's just a lot of fear out there. I think people they want to be in the market and they've been sucked in, but at the same time I think people are kind of a little apprehensive to just go all in on something because of how high all the prices are just everywhere. It's just an everything bubble. And again, I'm not trying to be a doomsday prophet here. Like it could still go up. It's just for my risk tolerance. It's funny because I carry these underwater shorts for forever, but I'm afraid to buy at the highs. I just think that the risk reward proposition of buying buying at peaks here, even with small little pullbacks, I think is a kind of like a losing proposition longer term. Any questions about metals and kind of where it might be going?
Well, the gold looked like it was kind of getting weaker.
Yeah, it did. I mean, especially with all this selling up here.
Yeah,
the volume is just crazy.
It looked like it's run. I mean, it should get up to 5,000 at some point because that would be the measured move from that flag that you were showing.
Yeah,
but it could have a pullback first. It looks like it's running out of gas. The silver just looks ridiculous. I mean, every measured target it's blown through. So
oh yeah, absolutely. Absolutely. And with gold,
I thought I was being heroic, with a $73 target.
Yeah, isn't it funny? I remember we were talking about silver back. Hold on, where was it? It was back way back here. We're talking about the 50s.
Yeah, when it was before it broke over 40.
That's right. Yeah, and I think what's funny about that is now you can start to see just massive volume, and that's where I think you really start to see the implications of how dangerous it is to tradable off top. I mean, silver was down what was it, 8% the other day, whatever it was. You get days like that. I mean, that could blow you out if you had options. That's scary to me. Yeah.
I have options.
Did you wait? I hope the long options.
Yeah.
Okay.
Well, I have some. I wrote some puts. Cover.
Oh, okay. Yeah. No, that's actually interesting.
On puts just to protect the long positions a little bit.
Yeah, it's actually a really good.
But I've had to move them up a couple times.
Yeah, well, that's okay. I mean, you usually make it up on the back end. It's kind of like having to continue to roll, covered calls. But eventually, when you do get a pullback of a couple percent, then the call value just craters.
I think I'm back at 70 though.
Okay. Well, I guess who would have thought, right? That this would be such a
Right.
insane sort of run. But to be fair, though, I do see these 5 waves here, and it's possible you could see this sort of pattern expansion. Maybe a test of the 50 DMA before another launch here for, let's say, another wave 5 of 5, that kind of thing. You could see that.
Well,
I think we saw that with
crazy
Nasdaq.
part was all they were talking about this past week was this rebalancing of the commodities. That supposedly silver was going to go down because of this rebalancing.
Yeah. Well, what I find interesting is that, I mean, in my opinion, once you start to see massive volume, that usually means that there's games being played by institutions, and they're baiting buyers by, running it up. Like for example, last night I was talking to a friend of mine who he's like, oh man, I got to get into the market. I'm like, no, hold on, just wait a minute, like give it a couple weeks, see what happens, But he's just he's not an investment guy. He's just he's just a guitar player, and that's all he does. But like, he was saying about how he was reading like Motley Fool, and basically it's clear hook, line, and sinker, FOMO kind of thing. It's like, all these, like, I was reading this thing, if you would invested, whatever in Microsoft, but I'm like, yeah, coulda, woulda, shoulda, right? But that also means you had to hold the entire time, which almost nobody does, unless you're some old lady, who bought AT&T stock back in 1921, anyways, but it's like some people get lucky like that, but not very many. You either have to like have the company, or like, own the company to have a vested interest in it to hold that stock, or have stock options where you work for the company for 20 years and just get lucky. But most people who are normal investors, like, they'll buy and sell, that kind of thing, and then they'll have the regret of, not getting out when they should have, or it's all those investing, fun things that we toil about in our mind. But okay, so metals in general, to kind of wrap up with this, it's still very bullish. But once I start to see all these, you see all this volume here, I think that there's a lot of people piling into it right now, and then that also puts it at a risk of a like massive pullback quickly. But again, it could still continue to run. Like, it's just a normal blow off top. But the science of it is it's pretty interesting. It's really all like emotion based, and not really like, nothing is technically based right now with these sort of trades. It's just more of like, the higher it goes, and like you wait until it just explodes, and then you wait for that really big sell. Yeah, the kind of sell that, super high volume, kind of like this, where it drops 10% in like 2 days, that kind of thing, or a single day. Then that's kind of like your signal that there are motivated sellers now. And that's kind of the same thing with the gold and silver, that I'm waiting for that next little shoe to drop here. And that's, I think, where a lot of people are going to get totally flattened. So when it comes to like holding calls, yeah, you can hold some calls, but just set a stop. That's it. Some people don't do that. But if you also have downside protection through puts or put spreads or whatever, that's good too. Just continue to manage that risk zone. And if you have you do have a true rollover, just make sure that those stops are set in the right spot. Or if you've already made a ton of money on it, just maybe taking some off the table isn't a bad idea. Because sometimes I kind of get this too, where it's like, if you have a really, really good winning trade, either you close it too early and you don't leave a runner because you just want to bank the loot, or you stay in it too long and then you get wiped out or wiped out of the position. So it's like, how do you balance the two? Oh, you take some off the table and leave a runner, but it's hard to do that in the moment.
It's hard with the options too, because the premiums are just through the roof.
Yeah, they're outrageous. Could you imagine being a silver market maker? Oh my God, it'd be broke. Like,
I mean, I only have like 4 options left, and I have 2 that are written.
Okay. Right.
And the premium, I mean, like I think I got like 6 points for something 8 points higher.
There you go. Awesome.
Well, but I still have a lot of risk, because I mean, my calls are at 50.
Yeah, that's true. So I guess just, overall, it's the same sort of, again, it's not advice, but it's the same sort of like strategy here. Yeah, same thing with equities. It's that, but I would say metals are a little bit more wild at the moment. But the risk of sudden downside, I think, is a lot more significant than something like risk of surprise upside. Like today we saw, a short squeeze attempt from the bulls in Nasdaq, but that really there wasn't a lot of power behind it. Like it just kind of seemed like it was a little weak, and I kind of feel like once all the money's been sucked in from the sidelines and the metals, then they'll sell it down. But these higher levels like 5,000 for gold and 100 for silver, like, I mean, prices will have tripled, quadrupled, from their original baseline, like just slightly less than a year ago. So long story short of it is, just be careful. Yeah, we're kind of getting into that crazy, the crazy part of the bubble. So, all right, let's move to oil here. So oil's big news was Trump said something, and oil went down. I added some short hedges just because, like the long position is great. I'll let it ride, but it got hot. Excuse me. Sorry, yeah, my throat's not doing well. But these these sort of moves like this is the first time oil's hit the the 200 daily moving average here in God, weeks, months really. It's just been slowly declining. So they're when oil is going up, it's like, okay, cool, because you're long, but you also want to protect against that inevitable downside. So you could see, if the saber rattling kind of stops here, and who knows what happens, but let's just say things cool down a little bit, you could still see something like this, where you get a correction or pull back to, like, let's say 58, and then that also sets up like the next like the sea leg higher. So let's say you got 1 week or 2 weeks of calmness, and then things get crazy again. Oil shooting up to 65 is not that big of a deal, because it's been so low for so long. I actually think it's kind of reasonable, but this point of control here, so I'd say like anything like 58 is probably a buy, just because there's a lot of crazy stuff going on right now, and crazy typically equals volatility. So that's pretty much oil. So gas has been kind of it's been a pain in the ass. I'll say that. Once you finally think you got this kind of figured out here for a pattern, then it keeps declining. So I think realistically for gas, sorry, I got all this crap here. Realistically for gas, it could head a little bit lower, but there's some decent buys, and especially if you're going to see, some crazy stuff happen with oil, then gas is probably going to join the party. But still, there's not really much for like people to go into that's the charts are kind of low, and I think energy is one of those things that it's probably going to catch a bid. Once you see some like money exiting equities, or exiting bonds, or exiting Bitcoin, that kind of thing. It's like kind of like the last sector that's gotten beat up, that hasn't really recovered at all yet. So everything goes in cycles, right? So try to think about it like that. All right. So stocks here. So if you want my opinion on stocks, I think stocks is a really good short right now. I don't want to say that and get burned, but it's like, man, it's just like, again, the volume kind of screams to me that there's been some good profit taking there, and this looks like a pretty clear sea leg up, and this also looks like a longer term sort of wave 4, kind of like we were talking. So this kind of looks like the S&P chart, right? So with the S&P chart, with a little bit higher of a high right here, yeah, I think this is just a really good spot to enter with some like SPXS, which I might do tomorrow, and I'll explain it. But I think that you'll see like an ending diagonal here, where it kind of just peters out. But I do think that you'll see some sort of run like that maybe, and then kind of roll over. I mean, at least until like the 305 kind of zone, I think is fair. But that could still be a nice short. Like the SPX or the SPX shares have been just pretty badly beaten down. But I've also noticed a lot of volume with some people buying that stuff up. All right, let's talk about Tesla quick, and then Nvidia, and then I'll do Bitcoin and MSTR. So Tesla stopped me out today. I think it probably will bounce. This kind of looks like a B wave here. But still, it's like, other equities would potentially decline. I still don't want to, hold any longs with some of these more, some of these higher level stocks. But it kind of does look like, we will have some sort of, run up to about 500 here. So let's look at Nvidia. Nvidia is just, you can't really catch a break. It's kind of doing this like textbook sort of ascending wedge, like sort of like a diagonal sort of thing here, where you could see it bounce here. I think what you might see is, if it does, break a little bit lower, sometimes these guys use these big stocks to like, push up the indexes. So they'll just do a big buy in like 5 of the core stocks, and that'll push the indexes up like like a squeeze attempt. But in this case here, I think that there's been a lot of sell signals, and the volume's been kind of declining here as you see some of this rise. So when you ever see this sort of divergence here, that's when you run for the hills, or at least take the loot and scoot. So we'll see what happens with Nvidia, but I think right now they're just kind of stuck in neutral right now, where I do think you'll see something like this. But they got some buy support. I think it actually might be a decent long if you want to hold it for a bit, but that's that's all up to you on whether you want to invest in it or not. All right.
Could you take a look at Google?
Google, yes.
Yeah.
Let me pull up my other chart for that. One moment, please. Hold on. Sorry, it's taking me forever. Yes, Google. Oh, I haven't updated this one in a while. Let me look at this guy 1 second. I got lists on lists. Oh yeah, I haven't updated this one in a while. Well, yeah, it kind of looks like a 5 wave to me.
Looks like the silver chart.
Yeah, no kidding. No kidding. I mean, yeah, you can kind of pick out like an extended wave 3 here. Kind of like this. I mean, I still could probably get a little higher, like 350, I think is a good target for something like this. You can kind of see it's like probably right in the middle of this wave 3, and then maybe a little pullback. But yeah, I mean, you can also see a 3 in here as well with an extension. Oh yeah. That's nice and extended. So yeah, I'd say, off the cuff here, about 350 is probably a measured move there. 341. Yeah, I guess what I'm kind of why I'm freehanding it here is because this is what I'm thinking. As you could see, just something just slowly creep up like that, or could do some sort of wave 4 thing where it just kind of stays range bound for a while here, and then then you finally see something like this where you've got this move. It's like trying to spreadsheet live. So you should see something like this, but just with different degrees. So if this is realistic, it's been kind of dancing on this 21-day moving average for a while, but the 50 is it's pretty close behind it. So you could see a test of that, and then that could set it up for another run a little bit higher. Does that make sense?
Okay.
That's just off the cuff, though. Don't hold me to it. All right. Oops. Sorry, I don't have anything fun on my desktop. All right. Bitcoin. So Bitcoin here. this is actually, this is another really interesting example here. So people that talk about like chart analysis and stuff being voodoo magic and whatever. Like I know a couple of people like that, but the reality is, I mean, fib levels are important, and this 0.886 level is very important. I've seen a lot of these levels hold as support, and also with resistance. So what that means though is if we actually did measure this, if we did measure this, I wanted to see like what the retracement might be. I think like above a longer term trend line here, like this 103 is probably going to be your max. So actually, interesting. So this could be, so sorry. I think we might actually see something like that, because 0.382 is typically like a wave 4 max, and well, not really like a max, but like you could go a little bit higher, something like this. And this ascending channel here is bearish until it resolves to the downside here. But we did see a lot of buying, so we know that there's some sort of enthusiasm there. But I still don't think that it's out of the woods quite yet. I think kind of what I said a couple of weeks ago. I think that people are going to try to get like MicroStrategy to sell a lot of Bitcoin, and kind of just games being played with it. So I think that we are seeing a bit of a perk up here, but this looks like a pretty clear ABC, like a wave 4 sort of thing. It might continue to putter around and do another ABCE or whatever, but if you do see pretty strong rejection here, then I think that kind of confirms that there's a wave 4. And I think I think the Nasdaq did that at close today, so it had kind of like the same sort of thing. Only this is a much longer time frame. It still had the same sort of like pattern. God, dogs scare the shit out of me every time. Sorry. Anyways, so does that make sense? Like kind of what that might do. This is just one scenario. You could have something like this, where by that time, if you see, so like you could have a small pullback like this, and then you could see by that time you'll hit this 200 daily moving average, because it might creep down by then, and that'll probably be like another resistance point, and then you'll probably see another continuation of it lower. So like this ABC that I've been showing for a while here, I think that this is probably not unrealistic, but I think Bitcoin's kind of fallen far enough where it kind of invalidates something like an ending diagonal. Kind of, it really kind of looks like a developing Head and Shoulders. So you could see that this probably, we probably see some sort of recovery maybe in the spring, something like that. But it kind of sets it up for a long-term sort of top like that. That's just kind of off the cuff as I've been looking at this here, but this is normally what I do at night in the dark. Just kidding. I turn on lights, but yeah. So hopefully that makes sense. So how that kind of correlates to MSTR is, it had a really, really nice run. There was a really big buy here, and I think that there were some shorts that got squeezed with it here. And I also kind of think here that you're seeing like this now kind of confirms this sort of like ending, like an ending pattern. I still think that you might see, like, it's not a guarantee, of course, but I still think you will see something like this. I think that's more than reasonable, just because like that's just a normal ending diagonal sort of pattern here for a long C leg, and just the fact that like people are buying here, that just means it's accumulating. So I think it's been beat up so bad that like if you see Bitcoin kind of make that fifth wave down, then you should see MSTR make that fifth wave down. I kind of think there's a possibility it might head a little higher, but I would say like your 200 level here is like your bifurcation point, where if the price exceeds that level, then it kind of invalidates this pattern here, and then you don't have to worry about shorts for a while. But overall, I'd say like if it kind of, continues to reject around here and doesn't really make a new local high versus what it made back in December 9th, then probably some shorts might actually be a pretty solid trade. But yeah, so hopefully that makes sense. Any questions, comments, concerns? I think I got time for one here. Nothing. All right, guys. Well, I appreciate you joining, and hopefully you guys get lucky and make some nice piles of loot, and hopefully hopefully we get a little bit of volatility here at least, so we can trade it and actually make some money. I think it's been markets have been kind of boring lately, so we should see something fun happen here shortly.
Thanks.
All right, guys. We'll talk to you later. Have a great
Thank
night.
you.